Good evening and welcome to the Passionate Realtors episode 2. I am so excited to be back. My name is Simon from Berkshire Hathaway, the Loft Warehouse. Today, we will be talking about lending in today's market. Although it's been a crazy year for all of us this year, but I had the opportunity to invite two lenders. They will be talking about what you need when it comes to lending in today's market. Please allow me to introduce Justine. You are Justine. How you doing today?
Hi, Simon. Thank you for inviting me. How are you?
I'm doing great. Thank you so much for coming in today. Justine, just give me a small background about yourself, your name, and who do you work for?
Sure. My name's Justine Maldonado, and I work for Gold Star Mortgage. I've been working for them since 2005. I've been in the business for over 20 some years. I don't want to say my age. So, yeah, I've been in for a while. I've seen a lot of changes. So,
That's awesome. Thank you so much, Justine, and welcome aboard. Let me
thank you.
introduce our second guest, Matt. Matt, welcome aboard.
Thank you. Thanks for having me.
Yes, absolutely, Matt. Just give us a small background about yourself and who do you work for?
Well, I'm with Lake Michigan Credit Union. I've been with the credit union since 2014. Been in the industry since about 2004, and certainly also seen, we've seen nothing but change. That's one of the constants you have, and been a great fit, and luckily to have been awarded as one of the top loan officers in the nation in the last several years by a lot of trade publications. So have a lot of fun helping clients and buyers move up, move down, first-time home buyers, and the like.
Beautiful. Thank you so much, Matt. And I heard a lot of great things about you, and that's why we have you here today. And so is you, Justine.
Oh,
So
thank
I
you.
really appreciate you guys taking some of your time coming down here. So the topic is very simple today. We're just gonna get to the point. Lending in today's market, because today's market is a little bit different than what we saw in the last couple of years, especially 2019, 2018. Before we started the show, Justine and I were just talking about seller concessions. It's really hard now to even like ask as a realtor for seller concessions in today's market because we have like low supply, high demand, and it's been really difficult to like when we make an offer to ask for any concessions. So, but when it comes to buying a home, there's a process that you need to go through, especially when you come to a realtor. The first thing I would ask you is, do you have a pre-approval? And if you don't have one, I don't show you homes. That's how I work. So the person that you need to call is Justine or Matt. So when it comes to first home buying, Justine is going to talk about the steps in the process that you need, especially when it comes to buying your first home. So Justine, it's all you.
Hi. So I want to talk about being a first-time home buyer, and I've been seeing a lot of MISHTA first-time home buyer programs. And with MISHTA, you get $7,500 grant to give to you, and it is forgivable after 5 years. Now, this can only be a primary residence that you can live in. You can't use it for a rental property or anything like that. And you will, so before you go to Simon, you would come to me and you would get a pre-approval. And some of the things that I would talk to you about is your work history. We need a 2-year work history. If you've been out for 6 months or longer, in the past 6 months, and you haven't been back for 6 months, you have to be back 6 months working, and then we can go back 2.5 years for a 2-year work history. MISHTA they have certain ratios on your debt to income, and that is something that I would look at with so you don't want to be getting new cars when you're looking for a house and trying to get all the credit cards you can get. If you have questions about your credit, come to your lender first, because they can guide you. I can guide you and help you and say, no, don't take that $50,000 car loan. So what MISHTA will do is at closing, we'll give you $7,500 towards your closing costs and your down payment. And what that means is If you're going, you can go conventional or you can go FHA, which doesn't mean a lot to you maybe right now as a first-time home buyer, but on conventional, you would pay 3% down, and on FHA, you would have to pay 3.5% down. So that money can go towards that, and then whatever is left over will go towards your closing costs, which include your taxes, your insurance, your appraisal, title fees. There are a bunch of fees that go in there, and that includes that. They have a certain income guideline requirement. So you can go to michigan.gov and search MISHTA and the income guideline, and you can go in there, and it goes to how big your family is. So it starts with 1 to 2 people, and it goes by county, and then it will go up to 3 to 4, and then on up after that. And you can go and look if your income is in that bracket. Now, the trick with MISHTA is anybody that lives in your home that is 18 or over, we count their income. If your grandmother lives with you and she gets Social Security, we have to count that income as household income. So that is something different that is not on any other loan. That's a guideline above and beyond what FHA or conventional will require. The credit requirements, you can come to me and we can look at your credit and see if it needs a little bit of tweaking, which we can do, or if you're good to go. And you would, yep, there you go. Thank you. So you can see right there, the Michigan Home Loan. They give you $7,500 down. There you go. Household income limits. And so you cannot go over 224,500. They will not let you have more than $20,000 in the bank. And it is a hard and fast. You must have 640. But if you think you're a little under that, we can help you get to where you need to be credit-wise just by maybe giving some suggestions. If you're going for a multiple dwelling, you have to have a 660. So you can see right there, home ownership. It's very straightforward. You would take a class, and once you get through the class, you get a certificate, and that is something that you will need to close with, and you will fill out a form for MISHTA that says you have put everybody on the loan and you have counted all the income. There's nobody's income you haven't counted, and you sign that. And those are the 2 extra things that you have to do for MISHTA. It is a great program. It is after 5 years that loan is forgiven. So every year they forgive 25%. So by the end of the 5th year, you would owe nothing. But if you sold it, refinanced it, or moved out of it, you would have to pay the loan back at whatever percentage you are by the years. It will allow you to get into a home where maybe before you hadn't been able to save up the money.
Beautiful. Thank you so much,
You're
Justine.
welcome.
And let me ask you this. Is there an expiration date on this offer, the 7,500?
No, this is a loan. This is not like the other grants that they have given. This one is an ongoing program that they have. They also have a home flex for somebody that has owned a home before in the last 3 years. And a first-time home buyer, the definition is you have not owned a home in the last 3 years. So you could have owned a home 3.5 years ago, and you're still eligible for the Michigan Home Loan.
Beautiful. Thank you so much, Justine. You did a beautiful job explaining everything, making it simple to the point. There is no like confusion or anything. And what I will do is I will put this link in the description with Justine's information as well. If you want to reach out to her, I will put her email address and her office phone number. Now, let me introduce Matt. Matt, welcome aboard.
Thank you.
Yeah, for sure. Absolutely. So
kind of got a Brady Bunch vibe going on here.
Yeah.
Just look down.
I know, right? Is there anything that you want to add, Matt? Or do you think she covered it all?
I think she did a great job. I love MISHTA. I think the only other thing to really point out in like giant, big, bold letters is you can buy with 1% down. You know, that down payment assistance thing that can let you do just so probably for less than a security deposit for renting, you can own your own home and start building up equity and get the tax deduction and everything else.
Beautiful. Thank you so much, Matt. And thank you, Justine. Now we are going to move to the second topic, and this is going to be by Matt. Matt, let's say um, they called you or they called Justine and they got the pre-approval. Now they're coming with me to the house. Of course, as a realtor, I'm going to do my duty, my best to show them what they should look for in a home. But there are certain things that the lender requires, especially if it's a first home buying, if they're getting an FHA loan or conventional loan. I know it's a whole different process, but what do you think some of the things that they should be looking for when they're looking at a house?
So from a lender's perspective, because that's what I know. From a lender's perspective, it really depends on the loan program they're going to look at. So Justine talked about conventional and she talked about FHA within the umbrella of MISHDA. And those both have different criteria as to what is an acceptable home. Conventional is Fannie Mae, Freddie Mac, to non-government, quasi-government agencies. They have their set of rules and tends to be a little bit more relaxed than FHA or VA or USDA that has their set of rules. The biggest thing is the home has to be habitable. So what's habitable? Utilities have to be working. You have to be able to turn on a sink and water comes out. You have to have a heating element that's common for the area. You need to have windows that aren't broken. So if you would feel comfortable living there, it's probably going to be acceptable for conventional. Now, FHA and VA and USDA rural development have their own additional set of criteria that are minimum property conditions is what they technically call it. And what that says is it gets a little more nitty gritty, like if there's chipped or peeling paint on the interior or the exterior, well, that probably will have to be scraped and repainted. If you have a couple steps going into the home or upstairs, downstairs, the basement, and there's not a handrail, someone's going to have to put up a handrail. Those are the big things, GFI outlets, wherever there's a sink. So let's say you find a home that doesn't meet some of those elements, or it's not uncovered until you've done your inspection. You didn't immediately see it when you looked at the home. You can try to ask the seller to help repair those, but in a competitive market, they may not be willing to do so. So in situations like that, you need to decide, do you still want to proceed with buying a home? Do you want to fix it yourself before you own it? Or do you want to look to something like a renovation mortgage? A renovation mortgage not only will help you finance the money to buy the home, it also gives you money to improve it, to make those repairs, to meet the minimum property conditions for the loan program that you're looking at. Some programs even give you extra money to do more than just those needs, but wants. I need to make sure that the home is habitable. I want my bedroom to not have pink and purple polka dots like the owner has it right now. Things like that. So a renovation loan can be an excellent tool, especially in a competitive market where you look at a home and you can see the potential, but your other buyers you're competing with don't. Maybe you can get a better deal for that home.
Absolutely. Thank you so much, Matt. He also did a beautiful job explaining everything. Yeah, especially when it comes to FHA. FHA, it's really important that there's no any hazards or anything like that in the house. And a lot of the realtors, we always will recommend getting a private home inspection anyway. So if you are a first home buyer, it's always recommended. And that's one of the main reasons I actually became a realtor. It's because I bought a house and I didn't know anything about inspections. The realtor that I had, they were good realtors. They sold me the home. They did not advise me on getting a private inspection. And now the house, I'm having a hard time selling it. So it's really important that you do a private inspection because there's a lot of things that can be within the person living in the house. They can change a lot of things. They can modify a lot of things. And when you try to sell it after 5-6 years, the zonings had changed, it's not up to code. So it's really important that you do that. So thank you, Matt, for doing a wonderful job going through everything. Let me add everybody through the screen. So how about you, Justine? Do you want to add anything?
I do think that the rehabilitation loans, the rehab loans are a great thing. Just be prepared. You're not going to close in 30 days on these usually. It's going to take longer, but it's well worth it. Like he said, you can get those pink polka dots off your wall for that. And so it's a great thing. To realtors, if you have a question about if something's going to go, like, hey, this is happening in the room, and what should we do? Well, it's much easier to take care of it before the appraisal than after the appraisal. So if you think, hey, it looks kind of, there's water markings, should we paint it? Call, and you have any questions, call your mortgage person.
Beautiful. Thank you so much. Okay, so what we are going to do, I posted through my social media if anybody has any questions for you guys, and a lot of people did send me some DMs. So let's go over some of the questions. We can all answer them. What we can do is anybody can volunteer to answer them. And if you don't want to answer it, that's fine. We can skip it and go to the second one. So let's go to the first questions. The first question says, what happens if the house appraises under the offer price? Let's say I'm a real estate agent. I put an offer for my client and the appraisal came out and it says this house is not worth it. Well, it's under whatever we offered. What should the buyer do?
So if you don't mind, I'll field this
Justine, it's
first.
all you. Yeah, go ahead.
Okay. So you have three options. First option is to go back and try to renegotiate it because the lender is only going to pay the appraisal or the purchase price, whichever is lower. So you can go back to the seller and say, hey, my appraisal came in lower, and you can negotiate. You can negotiate it down to where they take it. So let's say it's 5,000. They come down 2,500 and you bring in 2,500. Or at that point, you can walk away as long as you didn't sign something, say, hey, you guarantee over appraisal by $5,000 or something like that. Is there anything you have to add, Matt?
Well, you mentioned three things, so that's kind of the first one, right?
Yep, that's the first one.
Another one is, well, what if the appraiser made a mistake? What if he didn't have access to all the information in the market? Because sometimes sales don't always go through realtors. Sometimes you have to do a little bit of extra research. So you may want to go back to the appraiser with some additional information, additional sales, and ask if he can reconsider the value. So it's an appraisal is an opinion. It's not science. It's not fact. You get more information to see if he can redetermine the opinion.
Beautiful. That's what I was going to actually say. I was going to say, an appraisal is just an opinion.
Yeah, exactly. And you can have two done and there are times that I have to get two appraisals because it's sold within a certain amount of time and they require two appraisals and they come in at two different prices.
Oh, 100% all the time.
Yeah. Mm-hmm.
Beautiful. Okay, so we will move to the second question. What are the closing costs and how much will they be? Let's do Matt this time, then we can go back to Justine.
Sure. So that is a loaded question because there's a lot of variables that go into it.
True.
What go into your closing costs are lender fees, and that does vary from lender to lender. I mean, I think you can probably estimate that's going to be something under $1,000. You're going to pay for appraisal and credit report and some other ancillary third-party fees. Probably that's another $500-$600, depending upon your loan program, or if it's a rental, or if it's a multifamily, because those costs could change. Title company fees on top of that, another, depends on your more variables, maybe $1,000 on up, depending upon your purchase price. But the biggest variable of all are property taxes. You're going to have to pay in Metro Detroit area, Tri-County area, we pay taxes in advance. So you're going to have to pay the seller back for taxes that they've already paid, called tax prorations. You're going to possibly have to set up money into an escrow account if you're paying your taxes and or insurance in your mortgage. You'll have to buy your first year of homeowner's insurance. And those numbers do vary depending on the property. So, like I said, loaded question, lots of variables.
Awesome. Thank you, Matt. You know what? I got one more question for you because you guys, Lake Michigan does a lot of condos. Mm-hmm. Will you be paying HOA fees as well at closing?
Not through the mortgage, but you will pay prorated dues for condo association back to the
Okay.
seller because they've already paid for the month. Some
Okay.
condo associations may want to have you pay next month in advance. If you're the first purchaser in a unit, you may have to give the association a little bit of a working capital reserve of a couple months of association dues. So, yeah, you will pay some amount of association fees.
Beautiful. Thank you so much, Matt. Okay. My friend Justine, do you want to add anything?
Just that when you're a buyer, look at the taxes. Homestead, non-homestead, that's going to make a difference. If we can get the title company to write a certification, hey, the taxes will be this amount. We can use the homesteaded instead of the non-homesteaded. So if you're wondering why one house and they can be the same, maybe the taxes are 40% more. Why? It's because it's non-homesteaded, but you will have to pay back the non-homesteaded prorations to them. So, just as a home buyer, if you're running real tight on money, those are things to look at, the taxes on the house. Wouldn't you agree, Matt?
I think what you're saying is talk to your lender if you want to get a good idea of closing costs before you make your offer.
Yep.
Yeah.
I like that. Simple to the point. Absolutely. Yes. All right. We are going to move to the interest. And this is the question that is driving everybody crazy. Everyone
Mhm.
wants to know why interest rates are so low right now.
So,
We'll go with Justine.
okay.
Sorry. Go ahead.
No, I didn't know who was going to take it.
Yeah.
Well, if we look at what is going on in the industry or in the even in the world, in the country, we're at they're trying to hold down the interest rates. So the federal fund, that people say, oh, the Fed's lowered the rate and that's the lowering of the rate. No, that's what they lend to the banks. But the banks are also then it trickles down to the other. But it also, they're trying to keep down and keep the economy flowing. So it's they're just wanting to make sure. I'm sorry, I'm at a loss for words. Um,
It's okay.
they want
But
to
we
make
get your
sure
point,
that the
though.
economy is staying low. So
Yeah.
they're doing everything that they can to lower the rates. But one of the things that they look at is what's going on in the bond market. So what that is,
True.
mortgage-backed securities is what drives the interest rate. And so some days you'll see if the stock market is doing really well, that the bond market might not be doing as well. So that will fluctuate. But to keep it low, they're just trying to beef up the economy. So we're not seeing another 2008.
That's true. Thank you so much, Justine. Matt, do you want to add anything? Or you think she
Well,
covered that all?
she did a
Go
great
ahead.
job. The big thing
Beautiful.
I think she's alluding to is inflation. They're trying to curb off inflation because when you have inflation, that's not the friend of the mortgage-backed securities. And when the mortgage-backed security prices go down, when the investors stop putting money into it, interest rates go up. So that's part of the reason why you're seeing the Fed funds rate staying at the lowest it possibly can be. And also in a questionable economy that we're in, the investors who are investing money, they take their money out of the stock market, they put it in the bond market. Well, it's partly true right now because you are seeing the stock market doing crazy, but there's also a lot of federal intervention in buying the bond markets and bonds in trillions and trillions of dollars. They're buying it like never before. So it's all about bond market activity, and the economists are thinking we're probably going to see rates stay in this general vicinity through the end of this year.
Absolutely. And that's what I've been telling a lot of my clients. Interest rates, I mean, they're low right now, but they're not going to be low for a long time. So if you're looking to buy, this is an opportunity for you to step in, even though I know that, like, prices are extremely high right now. They skyrocket with homes, but we are in a historic low interest rate. I mean, we had like closing 2.2, which is like crazy. We've seen like all type of like crazy interest rates, especially with a lot of people like right now buying, refinancing. So this is a great moment to take advantage of those. And you can either call either one, Justine and Matt. They both specialize in first home buying, second home buying, trying to upgrade. Um, you call me for the house and they'll take care of the mortgage. So the next topic is seller concessions. There's a question, and it says, "Is there a limit? Is there a limit on how much the buyer can ask when it comes to seller contribution?" We'll go with Justine.
Oh, so there is a limit, and on FHA it is 6%, and on conventional it can be up to 9%, depending on how much you put down. It goes from 3% to 9%, depending on how much you put down on it. So that is something that you can look to. But in this market, Simon, you and I think Matt were talking earlier. I don't know about Matt, but I'm not seeing a lot of seller contributions at this time because too many people are bidding. They're like little piranhas bidding on the same house. So if you ask for seller contributions, so if you're at $100,000 and you're asking for 3% back, so 3,000, the seller is then only netting $97,000. And if somebody comes in and says, "Hey, I'll offer 100,000, no seller concessions," guess who's going to get the bid? So yes, you can get them. Yes, they are out there, depending on the program. But my suggestion is listen to your realtor. They know. Listen to
I agree.
Simon.
Thank you, Justine. So, Matt, do you want to add anything, or do you want to tell them? I mean, because we have a lot of first home buyers, they probably don't even know what seller concession is.
Oh,
They
yeah.
can call me and I can explain it. But do you want to talk about it, Matt? Since we do have a few minutes.
Yeah, well, we talked about closing costs before. What seller
Correct.
concessions is the seller helping to pay those closing costs for you. So the seller can give money towards closing costs. They can pay taxes and insurance. They can't pay down payment. You've got to come up with your own down payment. So that's where we talked about MSHA way at the very beginning. That's where MSHA is really key. It can take a buyer who may not have that money saved up, who may otherwise rely on concessions. They don't have to rely on it because they've got the MSHA money. They've got the MSHA down payment assistance. So now they don't have to ask for concessions. Now their offer is stronger when they're competing against other people who are asking for concessions.
Beautiful. Thank you so much, Matt. And again, thank you, Justine. So, how can they reach out to you guys? Let's start with Justine. If there's a first home buyer, how can they reach out to you? Where can they find you?
So my office, I have offices in Plymouth and Livonia, but the easiest way is to give me a call at 734-751-2184. I'm available almost all the time. So you can give me a call and I will, we can talk over the phone. If you want to meet, I can give you my office and we'll decide where to meet. And so the phone is the first place to get a hold of me.
Beautiful. Thank you so much, Justine. And how about you, Matt? How can they reach out to you?
Phone's a good option. You can call me at 248-219-7552, or you can go to applywithadler.com or find me at Apply with Adler at your social media of choice.
Beautiful. Thank you so much, guys. And I will link I will put their phone numbers and their email addresses and the websites and the company names they work for in the description of this podcast. If you want to reach out to them, please do so. They are great people. They will help you. They will take care of you. And when you're ready, give me a call and I will make sure that I take care of you too. Once again, I want to thank you, Matt and Justine, for taking some of your time tonight, coming out and explaining everything of what's going on with today's market. So I do appreciate you guys. And you guys have a wonderful night. And I will be in touch with you guys soon, hopefully with some clients.
All right.
Thanks for hosting us.
Thank you very much. Nice meeting you, Matt.
You too.
All right.
Absolutely.
Thank you.
Thank you, guys. Take care.
Bye-bye.
Bye.
Bye-bye.